A lot of businesses run into issues during this time of year. Yes, it is tax season, and this issue tends to bleed over into the rest of the year because they do not have quality bookkeeping processes. So, today we're going to talk about some of the things that your bookkeeping process have to have in it to avoid tax issues and to help you run and make more money in your business. And stay tuned because in today's tax tea, we're going to talk about a restaurant owner that is sentenced to prison and some probation afterwards for a $2 million tax scheme. So stay tuned for today's episode. All right, welcome back. And also want to welcome the co-host of the show, Lola. Welcome back to the show.
Hello, hello, hello. I'm happy to be here. Excited for today's episode. Welcome to the Stuff Your Accountant Isn't Telling You, where we share, what do we share, Terrell? Secrets and strategies. I should let you say it. Go ahead.
Well, the stuff your accounting isn't telling you, this is where we share secrets and strategies that help small business owners use some of those strategies that big businesses use to make more money. So, if you want to make more money in your business, this is a show you should listen to. Also, for all you accountants out there and bookkeepers, if you want to get access to the secrets to help your clients make more money, listen to this show. So, that is what we are talking about now. One of the big areas that I see a lot of business owners struggling with is when it comes down to getting their taxes done. And to be honest with you, the gentleman involved in the tax tea, this is a little bit of a bookkeeping issue as well. And he's going to prison.
Yeah.
And I presume he's going to have to pay back this $2 million. Plus, he has fines to pay. Plus, he is definitely going to serve some time in prison. And some of this is a bookkeeping issue that he really needs to really avoid if you're another business owner. So I want to make sure that business owners avoid those issues. But before we jump into the tax tea, we do want to talk a little bit about bookkeeping. So when it comes down to bookkeeping, what are your first initial thoughts that you hear or that you think when you hear the topic of bookkeeping, Lola?
So simply put, I would say it's just accurately categorizing, accurately reporting accurately categorizing and classifying your transactions and making sure that you have a complete view of the transactions that came in and out of your business. So that's how I would define. How about you?
Absolutely. Yeah, I mean, I would say it's just about understanding what the heck is going on with your money.
Pretty
Because
much.
I
A much
think there's so
simpler way to
many
say it. Yeah.
I think there's so many business owners that don't realize how much money is going through your hands. Because one of the
Yeah.
common things that I hear a lot of business owners say is, you know what, I see all this money that comes in, but I'm like, where the heck is all my money? Like I've seen when I look at the, my P&L, it says like, hey, we did 700,000 a year, but when I look at my bank account, I don't see that much there. And I'm like, the only way that you're going to understand what's going on with your money is you got to have some good bookkeeping processes. Because if you don't have good
Right.
bookkeeping processes, you're going to have no idea what's going on with your money.
No, I think that's a really good baseline, just like understanding what the heck is going on with your money. Because I think sometimes, like, honestly, I feel like the word bookkeeping is such a, like, it's been overused. Simply, it's just, do you understand what the heck is going on with your money? So I really liked your definition. But I think when it comes down to it, it's just really having a sense of knowledge as a business owner, when it comes to just how your business is functioning financially.
Absolutely. And, and I tell people a lot of times is that, you can't, although I give a simple explanation about like, hey, bookkeeping is about, understanding what the heck is going on with your money is yes, that's a
Hmm.
simple definition, but there is a process that goes into being able to figure that out because I think a lot of people do tend to think, oh, if it's just figuring out where my money is going, then I can just, sign up for a QuickBooks account, or I can just, use this app and it'll figure it out for me. I'm like, there are some processes, some best practices that you have to have in place for this to actually work well.
Yeah, that's a really, really good point. And one of the things that I think is a very great indication of that point that you just made is how often people come to us, even in our small business CFO program, how often people talk about how messed up their financials are. Like even when we do like initial reviews for some of the clients who we've onboarded, where they're like, I've been doing my own bookkeeping for the first 5 years, or hey, I hired an accountant. I didn't really know what was going on. I didn't understand what he was doing. And when I went to go actually look at my numbers, none of it made sense. Transactions didn't make sense. And a lot of that is twofold. I think one, it's because as a business owner, you don't really know, a lot of business owners don't really know how to identify when there's an issue unless it's a very big and obvious one. Like, for example, why do I have negative numbers in my revenue? Or hey, a situation where the bookkeeper may not be, maybe, or as we like to call it on the stuff your accountant doesn't tell you, or crappy accountant, and you just don't know because you have no way of really being able to identify how this is supposed to be done correctly. And so I think as a baseline, like just because like a lot of people do bookkeeping doesn't mean that everybody is good at it. And I think really for me, I'm interested in having this conversation to really just talk about, like you said, the best practices, because I think that will really help business owners walk away, especially the ones that are not accountants. Just like how do I even begin to like
Mhm.
evaluate what a good bookkeeping process looks like? Because like bookkeeping is something that we're focusing on right now in the program. And there's a lot of questions around like just simple things that, as an accountant, you understand and you think through. But I think like as someone who is on entrepreneurial non-accountant, these tools I think are definitely going to be helpful for them to walk through that.
Absolutely, absolutely.
Mhm.
And we're definitely going to jump into what some of those best practices are. And right before I do that, I do want to give some people some understanding, because I think sometimes when I jump into best practices, sometimes I realize that people don't know whether that actually is relatable to them. So I'm going to give
Mm,
a couple of examples first on, like, here are some examples of problems that people are having, and I'm telling you that, hey, a good bookkeeping process will fix that problem. Like, for
okay.
example, one is, you know, business owner reached out to me and said, "Hey, we need to get a loan and we need to provide financials to the bank, but when I look in my QuickBooks system, it's a mess." And
Mm,
when I looked at it, I'm like, you're right.
I
It is a
agree.
mess.
Yeah.
So they couldn't provide financial statements to the bank to get the loan that they need to get. Now, this was a business. Now, they had contacted me like mid in the middle of the year. This is a business that had already done 1.6 million in revenue, and they were
Wow.
well on their way to probably gonna hit about 2.5 million for the year.
Hmm.
And when I looked at their books, I'm like, yeah, none of this makes sense. So a
Mm,
bookkeeping process could have fixed that. Another one is business owner reached out to me and said, "Hey, I'm trying to figure out where my money is going, because we're doing about 750,000 in revenue, but when I look at my bank account, I'm not really seeing where the heck all the money went." Like, another situation, a good bookkeeping process could solve that and answer that question for you.
yeah. Yep.
Another one
Yep.
is, hey, I don't really understand, like, how much money am I actually making from doing my business this way? Well, when we looked at the financials, I'm like, yeah, I understand why you can't, because the financials aren't going to tell us, because you're missing a bookkeeping process. And another one is, and this one is very common for a lot of business owners, is when I look at the bank balance that QuickBooks says that I should have, and then I compare that to what my real bank balance is, something is wrong, because it looks like
Yep.
I'm missing money. And I'm like, yeah, this is a bookkeeping process. And then I would say the final one is, you get to do your tax return and then you find out that you have a tax surprise, whether you have to pay extra fees to your accountant that's doing your tax return, or you got a surprise bill from the IRS. And I'm like,
Mm,
A good bookkeeping process could have fixed that. So,
Right.
if you have any of those problems, or even if you're a bookkeeper yourself and you're an accountant and you hear someone talking about any of those problems, this is why you need to explain, hey, good bookkeeping process can solve those. Now, let's talk about what is in a good bookkeeping process. But I guess before I go into that, does any those examples I guess, have you heard some of those same stories as well as you've heard business owners talk about their business?
Absolutely. I actually was just going to say the one on the bank, like not matching what QuickBooks is saying I have. We're actually going to be sending there's a newsletter, if not already, going out on the specific topic. So if you haven't subscribed to the Biz Profit Secrets newsletter, go to tlturnagroup.com and subscribe. But yeah, no, I was actually laughing when you said that because I'm like, that's actually one that's been like a big topic. The other thing that you mentioned that I think is a common problem that I've seen very much so is I don't know where all my money is going. I don't know like I don't know where all my money is going. Like I'm making all this money, I'm doing really great. And I think it takes, it's funny because when I see people have conversations about how their business is performing, a lot of business owners, I think, especially earlier on in their business, will talk about top line. And they'll like, my business is doing $5 million a year. I'm like, this is amazing. $10 million a year. This is awesome. All right, how much are you actually walking away with at the end of the day? Like, what does your bottom line look like? And the bottom line is really going to give you a perspective about whether or not your business is profitable or not, right? And so I think that, like you said, a good bookkeeping process will really be able to help you understand how your business is truly performing. Because if you don't have clarity on that, I mean, I don't care how much money you make in revenue. Like if you're not making a profit, your business is not profitable. And outside of paying your employees, or if you want to do other things to grow and invest in your business, it's going to be difficult to do that with no money left at the end of the day. So that's one. I think you made some really good points, and like I think that's one that I think a lot of business owners aren't focused on. The last point that I think also Terrell is one that I've seen is just being able to properly manage their cash flow, like the money that's going in and the money that's coming out, going in and coming out of their business, right? Like who do I owe? How often do I pay them? I think one of the things that we talked about recently in one of the sessions we did, the Small Business CFO program, was where we showed like the schedule of like being able to look and see in your bookkeeping the pay when you like the transactions of people that you've paid and being able to see like the timing of when you pay those people, because then that allows you to kind of be able to do a forecast of when you expect money to come in and out. If you don't have a good bookkeeping process, you can't do a cash flow plan or any sort of forecast to say, okay, this is what's coming in and what's going out. And so I think that's also one that I wanted to add that's pretty important as well.
Absolutely. So if summarize that to say is this is if you don't have a good bookkeeping process, these are some of the results that happen when you do not have a good bookkeeping process. You get denied for loans from banks and financial institutions. You have no idea where your money is going, so it could be getting stolen. You're not making the level of profit that you should because you don't know where to make changes or where to make adjustments. You could be paying more in taxes than you should, or unfortunately you could be underpaying your taxes, and then if you get selected by an audit, then you could end up seeing an additional tax bill that
Mm-hmm.
you had no idea about. And to be fair, even if you don't get audited, the IRS may still send you a notice because there are some ways that they are able to calculate things without doing a full audit. So, those are 5 critical areas that I see a lot of people suffering from because they don't have a good bookkeeping process. Now, what is in a good bookkeeping process? The first one that I would say is you do have to address the fact of, is this going to be cash versus accrual? Now, this can be a very complicated accounting conversation, technical accounting conversation, but I think at the end of the day, it really just comes down to this: is as a business owner, when you do your tax return, It's going to ask you, is your business cash basis or is your business accrual basis? The biggest difference between those two, now, like I said, I'm going to oversimplify it. The biggest difference between those two is whether you're going to have how you recognize revenue. Do you recognize the revenue when you send the client the invoice, or do you recognize the revenue when you actually get paid? That is, for most small business owners, that is the biggest factor of whether you go cash basis or accrual basis. Anything you wanted to share on that, Lola?
Yeah, I would define it as like when you've actually, do you recognize your revenue when you've actually done the work that you need to recognize it, versus when you just collect the money. Because I do think that there are some services where people pay for stuff in advance. And for the cash method, it's just, hey, the money came in, the deposit. Like, for example, if somebody, like we have a lot of our clients where people do deposits for services, right? Or like if someone pays up front for like, I don't know, coaching services as an example, and they pay for the entire year, if you're doing cash, you would basically, when that deposit comes in, you recognize it as revenue. If you're doing accrual, you recognize it over the period that you're providing the service. So I hope that wasn't too accountant-y, but that's the way that I would look at it in a simple way. But again, I'm not like Terrell. I can't be like, giving you like super, 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 super simple definitions. But
I
that
do
is
think
it,
it
yeah.
becomes helpful because, I would say is as your business grows, like if you're interested in taking on investors or having
Hmm.
other people invest in um, your business might move more towards using an accrual style basis. Like we've
Right.
worked with some marketing companies that got an investment. Like there was another private equity firm that invested about $4 million into their business. And one of the things that the private equity company asked for is to switch to doing more of an accrual style accounting, which we did it because it made sense for that business. I would say
Hmm.
for most small businesses, the cash basis is probably going to be the most common way that they use their accounting or that they record their accounting. But
Hmm.
like I said, it may be a little bit different. And to be honest with you, sometimes I've even seen some people have a little bit of a mixture or whatever. But one of the
Yeah.
things that all of that I'd say is just decide which one is it going to be and just make sure you're consistent because the consistency is the part that actually matters more than anything. You don't want to be switching back and forth because one is that could flag an issue for the IRS because it kind of looks like you might be trying to hide or move income from one year to the another inappropriately. So you just want to pick one and then be consistent. The
Yeah.
next thing, oh, go
Sorry,
ahead.
one last point I just want to add on that is at least all of the Fortune 500 companies I've worked for have used an accrual basis. And if you think about it like this, just one last point before we move on to the second point. One, if you think about it like this, when you recognize revenue or you take in, let's say, like going back to the coaching example, when you just recognize all of that money up front, if you, let's say somebody puts $10,000 up front for services, you still have expenses associated with that service you need to provide that you haven't recognized yet or that you haven't incurred yet. So I think, for bigger companies, that's the reason why you want to match your expenses to the revenue. Because essentially, if you think about it like this money is coming in to help you basically cover the expenses to run and provide whatever service you need to provide. So that's another way to think about it is, from an accrual standpoint, most large companies, I'm not aware of any large companies that use cash basis. Most large companies use the accrual basis. And I think Terrell, you said it also because of the investment factor. There is some specifics there as well.
Absolutely. So the second thing is when it comes down to having a solid bookkeeping process, I think is having some type of online or web-based accounting system. Now,
Mhm.
I do get that some businesses are using kind of like a desktop version. In our current environment, one of the challenges that you have with using a desktop version is you're going to have to figure out some type of mainframe or VPN access if you don't hire a bookkeeper internally and you want to actually integrate different softwares, like it's going to create some extra steps. Now, if you're a small business, chances are an online tool like QuickBooks or like Zero or FreshBooks, those could be very helpful, very helpful online tools. And the reason why I highly recommend an online tool is because it allows you to integrate or automatically integrate your banking data right into your system. Because if you don't have a automatic data feed, meaning everything that's happening in your bank account automatically feeds over into your accounting system, if that is
Mhm.
not set up, then you have to create some manual process to do that. And I'm like, when are you as a busy business owner going to have the time to manually upload that? And then are you even going to know how to do it when it's time to upload that? So, any thoughts on the online software versus other options?
I just like the accessibility because I think when you have a desktop version, you're tied to the desktop, right? Because do they still do like the CD thing, or how does that work? I don't even know.
Um, you know what? I'm not even
Or
sure
you like
how
download,
like
I think
these.
you
Go
download
ahead.
it on your computer, and I think it's tied to the computer. This is like, I guess, any software you download, right? It's
Mm.
tied to that specific computer. So I don't like the idea of that because then I think it becomes hard for other people to access it because then if you just have your accountant managing everything there, if this computer dies today, like, okay, does that mean that you lose all your data? Like maybe it gets backed up in a cloud somewhere, but I wouldn't advise it. Just mainly because you want to be able to access your financials pretty quickly. And I think kind of tying you to the desktop version makes that difficult to do. Whereas a lot of these accounting systems today have even applications. One of the things that we do with our bank account or with our accounting system is it allows us to basically take pictures of our receipts when we're out. So when we incur expenses, we can take pictures immediately and upload those into the app. So there are benefits to that. And I highly recommend that because the automated process, like you said, Torah, like no one has time to go and download transactions on the bank account into and load it into the desktop version. So save yourself the time and give yourself options to be able to quickly access the data that you need because it's important to be reviewing this regularly.
Absolutely, absolutely. And I think even as I mentioned, like this is something I end up talking to a lot of business owners about is, you know, we're using an online system. Got it. You got, that's step two of the process. Now, step three is let's actually connect your bank accounts to it, like your bank accounts, your credit card statements. Like, what are all of the business accounts that you use related to your business? And let's make sure all of that data is feeding in. Now, one of the common things that I've seen, in which I'm helping a business work through that now, is their last tax return, like their tax prepared their financials and prepared their tax return, but what they ended up doing is they ended up overpaying their taxes last year because they had a whole nother business credit card that wasn't connected to their accounting system. So
Oh,
they out on all of those expenses that they had on that credit card did not get factored into their financials, which
oh
means
no.
their income was artificially higher than it should have been, to where I'm just
Oof.
like, yeah, that's why we need to make sure that we get all of the accounts and we need to make sure all of that data is feeding into the system. So when we do the bookkeeping, you're not overpaying taxes because we're missing expenses.
Oh, that's good. That is very, I mean, not good for the business owner, but that's a really good point. It's unfortunate. No, but that's
Yeah.
a really good, and you know what? Like, if you're listening to this as an accountant and you're thinking to yourself, like, that's basic, like, that's obvious, or even if you're listening to this as a business owner, being like, yeah, like, duh, trust me. We have been in multiple situations where we have seen where those transactions have been missed, and you're just like, this is very important because, like you said, Torab, accounting for those expenses could be the difference between owing the IRS money and getting a refund. So please don't do that.
Absolutely. I mean, and I think even with that is it's like something as simple as if you're looking at your balance sheet, the balance on the cash balance on your balance sheet should reconcile to what your bank statement says. Now,
Whew.
there are a ton of accountants who are or people who have, they've learned QuickBooks or they've learned Zero or FreshBooks or some other system, and when I look at their, like, if I'm bringing on a new client and that client has been with another accountant or bookkeeper, one of the first things I look at is, have the bank reconciliations been done? Like, I'm looking to see, does the bank balance in the balance sheet match the bank balance in the bank statement? And I'm telling you, I'm like, at this point, I am not shocked. But at first, I was shocked at the number. I would say 95% of the businesses that we were
Mm,
bringing on as clients that used to have a different bookkeeper, their bank balance didn't balance to the bank statement, to where I'm just like, okay, something's missing here. Like, you guys didn't, like, reconcile this, or like, why is there a difference? And
yeah.
there was I remember there was one client that when we took them on, I'm like, okay, these numbers are way off. And after doing some digging, and we found out that the client was missing about $137,000, because this problem had been going on for like a couple of years. And when we dug into it, what we found out was that some of the people who were using American Express to buy their products, for whatever reason, it didn't get set up properly with American Express. So American Express wasn't sending them the money that belonged to them. So, but now
Listen.
at the same time, the bookkeeper who was doing their bookkeeping was also filling out like their sales and use tax. So the bookkeeper had them paying sales and use tax on money that they never received for like several years.
Oh,
So
wow.
to the point where they continued to run into cash flow problems. And it was to the point that they even had to get on a payment plan to, relate it to the sales and use tax plus some other stuff. And they were like, I just don't understand why we don't have enough money in our bank account. And then when we looked at it, we were like, oh, that's because you're not getting all of your money. And we found it by doing the bank reconciliation, and we were digging through the details, because we were like, this is how much money should have come into your bank account. This is how much money actually showed up in your bank account. And then when we traced and we found the difference, like, oh, it's this American Express merchant processing that you're missing. Now, of
Man.
course, they were extremely happy.
Yeah, 137 grand. Like, just like, okay. I mean, probably the pain of having to deal with the whole cash flow issues wasn't fun, but thankfully the business survived. But yeah, no, yeah. I will say one of the things that I think I realized even walking through this myself was the bank matching what you're actually showing as a QuickBooks account, I guess, bank account balance is so important, because one of the things that I realized when I was doing some work for a client is just the duplicate transactions, like when stuff is
Yes.
incorrectly classified. Can you imagine reporting like 50, 70, 80, 90 grand, like just wrong, like $90,000 worth of expenses that are duplicated or that are missed or misclassified? Like, so it's extremely important. And I'm not gonna lie, like I didn't realize the importance of it until I actually had to walk through and saw how like the misreconciliation literally changed the client's numbers by like night and day. It's a big deal.
Yeah. I mean, it is. I mean, there's a client that I'm working on now where their their bank balance, like their bank balance was about, well, when I first started working on it, like a couple of days ago, their bank balance was about $70,000 different from what the
Wow.
bank statement actually said. So according to their accounting system, they were supposed to have an extra $70,000 in their bank account. And
Mm,
rightfully so, they were asking questions like, where is my money? But then when I went in and I looked, and I was like, oh, okay, what's causing this is there are a ton of transactions that were duplicated. And some of that was because of stuff that the business owner was doing. Some of it was stuff that the prior bookkeeper or accountant did not properly explain to them. And
mm,
so now I'm working through the cleanup of that to say, okay, all right, here's what your number should be. And then also the other thing that causes, because those transactions were duplicated and it was creating this fictitious bank balance number, it also created this fake revenue number, to where,
mm,
again, this client overpaid their taxes because the bookkeeping process was not a good one.
Were they doing their own bookkeeping or did they have an accountant doing it for them?
So they were doing it and then they had an accountant review it. And when they started asking more questions about the bank balance, that's when the accountant was like, "Well, you should probably hire a bookkeeper to really fix that or whatever." And I'm just like, "But they still filed the taxes using that data." I'm just
Are
like,
you
they
serious?
they filed the prior year's taxes using, like, knowing that, hey, there's an issue here. Maybe the issue wasn't as big in the prior year, but I'm like, you know that there's a problem here, but you still use this data to file the tax return. Like, and I
Wow.
think the challenge with that is that when if the IRS finds an issue, the IRS isn't going to go back to the accountant and say, "Hey, you filed this wrong, so you need to pay the penalty for the difference." The IRS is going to go back to the business owner and say, "Hey, there was something wrong. You need to cough up some more money." Or like, "Hey, if you overpaid because your numbers were wrong, the IRS is going to be like, 'Hey, we did an audit and we found out you overpaid, so here's your extra money.'" Like,
Never.
they're not going to do it that way normally. So, I mean, that's why I tell people, like, you need to have a solid process, because if your numbers are wrong, that means you're going to report wrong numbers in your tax return. And if you're trying to get a loan from the bank, like,
Hmm.
you're going to report, because the bank is going to look at that and say, like, "Okay, your revenue is really, really high." And then they look at your balance sheet like, "Oh, okay, it says that your cash should be, $70,000 higher. It says that you should have, $270,000 in the bank." And then the bank is also going to ask for bank statements to prove that. And then when they
Hmm.
look at the bank statements and they're like, "Well, these bank statements only say you have 200,000. Like, why is there a $70,000 discrepancy?" To a bank, they're going to look at that and say, "I don't
Looking
know
at
if I
some
can
books.
trust your numbers."
Yeah, yeah, it's shady. Doesn't look right.
Yeah.
Yep.
And it's like, if I can't trust your numbers, I'm probably not going to feel that comfortable giving you a loan.
That's good.
Yeah. And so the next thing I would say is, to a really good bookkeeping process, I think, is to regularly review transactions and like classify transactions. I always tell people is set aside anywhere from 1 to 2 hours a week to just go through what transactions came in, classifying those to make sure that all aligns properly. Because if you wait until the end of the month, what ends up happening is there's so much activity that you don't want to do it. And then you put it off and then you say, "Well, we'll catch it up next month." You don't do it then. You get to the end of the quarter and you're like, "Well, there's way too much stuff. I don't have time for this." And then you get to the end of the year when it's time to do your taxes and you're trying to do everything all at the end of the year, or you're just trying to pay your tax preparer extra money to do it. And I'm telling you, they are making errors. If they have to do the entire year all at once, they're probably going to make a lot of errors and mistakes, which means your tax return is going to be wrong. And so I always
Hmm.
tell people is do it gradually throughout the year. And also, if you're looking at your numbers and there's a regular bookkeeping process of updating your numbers throughout the year, what that does is it gives you a chance to actually look at the numbers and use the numbers to make business decisions throughout the year. Because I think there are probably too many people that aren't looking at their numbers, so they
Hmm.
don't really know how to make good or how to make good financial decisions, because they just don't have the numbers.
Yeah. And I think not just also having the numbers, but I think also just being able to interpret like what the numbers are telling you. I think that's important. So that's something we're going to be diving into next month on the podcast. So yes, but no, but I think more importantly is just like you said, Terrell, I think the importance of just doing it in small chunks. And I think going back to the case we made about choosing the right accounting system, that's why doing it online is so important too, because
Yeah.
you can go into the app, open the app, you have 10 transactions this today or over the last couple of days. Go ahead and classify those transactions in a way that makes sense for your business. That way, when the end of the year comes, it's much easier to hand off that access to your accountant or your tax accountant to prepare those financials for you. or not financial, sorry,
Absolutely.
tax returns. Hmm.
Absolutely. I mean, it's one of those things that I would say is the final piece, I think, of a quality bookkeeping process, I think, is doing a review of the financials. I mean, because at the end of doing the bookkeeping steps, there should be financial statements where you can look at it, see, is it reasonable? Is there anything that looks out of place? I mean, if you're a business and you're large enough to where you've hired a bookkeeper, is asking them to share the statements with you so you can look through it. You can ask questions. Like, that's one of the things we do at all of our clients is we create files for the client to be able to go in and say, hey, here's where your financials are. You can look at it and they can ask questions about anything that looks off or anything that doesn't make sense. And then we can follow up, we can correct it. So by the time we get to the end of the year, they've seen their financials at least once a month, to where nothing in there is a big surprise to them because they've seen it throughout the year. We've corrected different errors or different things that may have been in the wrong place. So I definitely think you should do that. Now, I will say, for people who are doing their own bookkeeping, my best advice, or I guess you say final piece of advice in this conversation would be, is to contact the TL Turner Group and get a bookkeeping assessment. And what that's going to do is, where a bookkeeping specialist or an accountant from our team can work with you to help create and lay out what your process can look like. Like, they'll check those things like, hey, are all the bank accounts, credit cards properly mapped to your system? And kind of give you some guidance on, hey, how do you do the accounting for this, or how should you properly account for this to make sure this works? And doing a quick check, because we have several businesses where business owners want to do their own bookkeeping, but we're like, hey, let us do an assessment to make sure that you have a good game plan. And once they have that game plan, they can do it themselves, but it allows them to ask questions and to get help with things like their chart of accounts, their mapping, some of their, like, bringing in their payroll data and stuff like that, to where there are certain questions you need to get answers to. And people in the small business CFO community, they're asking those questions, they're getting answers. And some people are like, hey, I need specific help. So they sign up for a bookkeeping assessment, to where they walk away confident that, hey, this is going to happen properly the way that it should.
Yeah, and I think that's important, especially if your plan is to do your own bookkeeping, right? Like if you're like, I'm not at the point where I can afford to bring someone on full time, like it's important to at least get that bookkeeping assessment so that you're kind of starting ahead, because it sucks to have to, in addition to everything else you have to do in your business, to figure this other piece out and just be on edge as to whether you're doing it right or not. So I've definitely seen it work really well for the business owners that have signed up for it. So yes,
Absolutely. Absolutely. Now, before we wrap up, one of the things that I wanted to talk about was the tax tea of the week. Now, this week we're
absolutely.
talking about a restaurant owner who is going to prison for a $2 million tax fraud. They
Mhm.
probably will have to pay this money, all of this money back, plus some fines, plus go to prison, plus be on some type of probation afterwards. And they probably will not be able to start a similar restaurant in the same area, probably for some time. So tell us a little bit about this week's tax tea.
Yeah, so this week's tax tea is Mr. Chen. So Mr. Chen co-owned and owned a couple of Japanese and Chinese restaurants in Massachusetts and the other name of the state that I cannot pronounce. But anyways, owned a couple of restaurants. And the funny thing about this situation is, I just want to preface by saying that he was doing his own accounting and bookkeeping, and then he was handing over his financials to his tax accountant to prepare his taxes. Now, what Mr. Chen was doing was he would go in and review the POS transaction. So POS, for those who don't know, is point of sale. That's what it stands for. And restaurants will usually use what you call like a POS tool. Like, what's a good example, Terrell, of a popular one?
So you have
The POS system.
Square.
Okay, yeah. So
Square is
Square.
probably a very popular one.
Yeah. So would use like, so Square has like, daily, they'll do daily deposits into your bank account, and they have daily reports where they show, hey, all of the money that your business made, and the per by transaction. So what Mr. Chen was doing is he was going in and he was deleting those POS transactions. Now, I don't know if he was actually going into the system and actually deleting them, or if he was deleting the transaction within his QuickBooks or Zero or whatever he was doing. But this is a perfect example of how the bank reconciliation is not matching the QuickBooks account, because if he was deleting those transactions within, like, let's say QuickBooks or Zero, but his bank balance was showing a higher deposit or higher amount of money, that's already a red flag there, right? So he must have just printed out the financials and handed them to his tax accountant, because if I was your accountant and I saw the bank isn't balancing with what's going on in your QuickBooks or in your Zero, what you're showing as your bank balance, like that would have drawn a red flag. So he was deleting the POS transactions, and doing it for multiple, like almost all of his restaurants that he was managing or co-owning. The other thing he was doing was he was paying his employees under the table cash. So of course he wasn't paying FICA, unemployment taxes, those kind of things. But the biggest one was this POS deleted transaction. So
Wow.
yeah. So any thoughts on that before I kind of go into what his penalty is and his sentence?
So, I mean, I think there's so many problems. There are
Oh yeah.
problems on multiple levels on this. I think from a federal tax standpoint, I mean, you're grossly understating your income. I
Of
mean,
course.
that's
Yeah.
pretty much what he was doing. Is
Yep.
he was, getting rid of, not reporting all of his sales. So from a federal level, grossly understating his income. Now, also at the same time, on the state and local level, he was probably underreporting his income there, which is not only an income tax issue, but is a sales and use tax issue, which I'm just
Yes.
like, all right, you're now like compounding the problem. You're creating a federal problem and you're creating a state level problem. Um, and
Do you
then
think he
oh, go ahead.
actually, I was gonna say, do you think he actually wasn't paying? I mean, I guess because it does get confusing to kind of have to cook multiple books. So you think he was just using the same dollar amount, like the same understated sales amount to file his sales
Yeah,
taxes?
I think he was. I mean, I
Okay.
believe he was. I mean, and the thing is, this is something that I think a lot of I've seen some business owners, do this, and I've seen some business owners misunderstand this. Is that if you're using a major point of sale system, a POS system, that point of sale system is probably already filing paperwork with the IRS to tell the IRS we have transacted or we have given this person X amount of dollars. So it's
Yep.
almost like the IRS already knows that your POS system gave you more money. So then when
Hmm.
you fill out your tax return and they can easily look and see you reported you reported $1.2 million for your sales, but the POS says they gave you 2.9 million. Something's missing. Like, hey, there's a gap here. And
Right.
that's
The math
where
doesn't
it,
happen.
yeah. So it's like people don't realize that, like, hey, you're not getting over on anybody. They already know what the right answer is in this case. They're just wanting to see, are you going to be honest about it?
Honestly, it actually surprised me that it took this long because it says that he's been doing it since 2013. So there are a couple of, I guess maybe he kind of, repented and felt bad and didn't do it some years, but it says pretty much from 2009 to 13. So they must have known because, like, what is this? We're 2023. He was convicted in January. So, like, I mean, it's been like 10 years. So he must
Yeah.
have done something, slipped up or whatever. And I
Yeah.
always find it funny how like these reviews happen like on the crisp of like the 7 year timeline where it's like, oh, 6.5 years. What? Audit, review, convicted, guilty. But yeah,
The thing is, and I think the thing is, there are some crimes that you commit that I think like, I don't
it
think
voids it.
some crimes don't fall under the statute of limitation. Meaning, like, if you
Oh,
committed some levels of fraud, like, it doesn't matter. They can go past 7 years because
got it.
if it was, I think some things, like if it was an honest mistake, 7 years may be the statute of limitation. But if you intentionally committed a crime and it was some type of fraud, I think they
Mhm.
might be able to go past 7 years if it is that situation.
Oh, okay. I didn't know that. Yeah, that would be that makes sense then. I think one of the other points I want to make before you, I know you, or actually you had a point to make. You want to make your point? I think there was something else you wanted to say that there were two things wrong with it. One, you shared the first point. What was the second point?
Yeah, I mean, I think the understating of the income from a tax standpoint at the federal level, the state level, and on the sales and use the local level, sales and use tax. The
Hmm.
other one is you have partners in this business, which
That was the
means
one for me.
you
That
have
was just what I was about to say.
like you not this isn't just like he's only impacting his own life. Like you have
Yeah.
screwed over your partners in the business. And it's one of those things that I've seen a lot of business owners go into partnerships with someone. They're like, oh, my business partner handles all the accounting, and they have
Hmm.
no idea what's going on. Now, I'm not saying that you should not trust your business partner, but you should have some kind of idea of what's going on. Like in this case, I think a very simple comparison would have been is for the business partners to be able to look at the POS. What does the POS says? And you can look at a transaction deposit report. That will tell you this is how much money the POS system has deposited into our bank account. And if you compare that to your revenue number, it should be very, very close. I mean, there are
Hmm.
some timing differences in there, so that's why it may not be exact, but it should be very close enough for you to be able to say, like, hey, we've done our part and kind of reported all the income that we need to report. Like, and that's a very simple check you can do, even if you aren't the one responsible for doing all the accounting or the bookkeeping. Or you can simply just look at the bank balance on your balance sheet and look at the bank statement and see, do these two things reconcile and do they match? If they don't match, then you need to have a conversation with your business partner about, like, hey, what's going on here?
Right, exactly. No, and one of the things that I actually thought about while you were talking is just situations where we found where that review between like the POS system and what's actually getting deposited into the account, we found discrepancies there on the cash side of the transaction. So it's important to do that review. But yeah, so this gentleman is going to prison for 18 months. And then
Oh
he
man.
already has, yeah, he's already paid $600,000 of the $2 million that he I guess evaded. So I don't know. He did have a $20,000 fine that he has to pay. Um, but other than that, I think after he comes out of prison after 18 months, he's going to be suspended for a year, I believe, as well. So
Wow.
he's probably going to be required to pay that $1.4 million back, but there was no mention of that. I
I
do
mean,
feel bad for the business partners, though.
because what I would see in this situation is probably definitely gonna have to pay back the rest of the rest of the money that he owes,
Hmm.
because based on the way I think the article had it written, um, I don't know if it was, well, yeah, it did say it was $2 million in taxes that he had not paid, so he's
Well,
probably
they
gonna have
did
to pay
say
all
to
that.
date. Yeah, they said to
Yeah,
date he
on the
has
federal
paid.
level. Now,
Yeah.
that doesn't mention, because that was on the IRS's website at the federal level. That doesn't mention what he owes at the state level. And
Nope.
then probably because he was underrepresenting the revenue, like his business partners, their tax returns were wrong. So they're probably going to sue him
Dang.
for
That's rough.
restitution and damages, because they're going to have to pay penalties because their tax return was wrong, because he messed up the numbers for everybody in the partnership and he had multiple restaurants. So
It's a
they're
hard knock
probably
life.
going to sue him.
Mm-mm. Well, I want. Do you think they would get the fees would at least be waived and the penalties would be waived for them,
I mean, I think they can make an argument with the IRS about
whether he
getting
didn't
the
know?
fees waived.
Hmm.
Yeah, I mean, they can just say, "Hey, this guy's been convicted because of, hey, he underreported our revenue and stuff like that." And they could probably get the fees waived and then maybe have a payment plan for paying off the rest. Or they say, "Hey, I only own 10% of the business." So they get their prorated portion of taxes that they're supposed to pay.
Yeah.
So that can be in, they can work out some type of process, because I think the IRS would work with them, knowing that they were not the fraudsters in this situation.
Or so we think. Anyways, that's your tax tea for this week. Any final thoughts, Mr. Turner?
Yes, the final thought is thank you everyone for listening to The Stuff Your Accountant Isn't Telling You. This is the place where we expose the secrets, the strategies that big businesses are using that small businesses can use to grow their business and be more profitable. And thank you for tuning in. Make sure you subscribe and tell a friend to subscribe to the show.
Hey, it's your girl Tia Robertson. I'm the host of Entrepreneur Insider. Right here on IETV every Thursday at 6 p.m. Eastern for entrepreneurs and news that you need to know about. See you there.
Welcome to What's Going On? My name is Demita Joe. Each Wednesday, you can find me here at 3 p.m. I'll be over here discussing different things that are going on and try to bring you a boost of positivity for your week, because we all need this. We're going to share some feel-good stories. We might find a hometown hero. We may take a look at some trending topic. And sometimes we might even find a lesson in a not-so-warm and fuzzy story if we can. I'm Demita Joe, and I'll see you guys on the next episode right here on What's Going On?